morning, European stocks tumbled and credit risk rose after US President Donald Trump's threat to impose additional tariffs over Greenland. Gold hit a fresh record and the US dollar fell. US share markets were closed on Monday for the Martin Luther King Jr. holiday. US equity futures slumped in holiday trading as trade tensions between the US and Europe flared over Trump's push to take control of Greenland. Futures tied to the Dow Jones Index fell by 401 points or 0.8%. S&P 500 futures dipped 63.5 points or 0.9%. And Nasdaq 100 contracts slipped 290.7 points or 1.1%. US government bond markets were also shut on Monday with no cash trading of US Treasuries. US 10-year Treasury futures fell, implying a 2 basis point increase in the corresponding cash yield. European share markets logged their biggest daily drop in 2 months on Monday as investors were rattled by US President Donald Trump's threat of additional tariffs on 8 European countries until the US is allowed to buy Greenland. The continent-wide FTSE Euro First 300 index fell by 1.2%. Equity benchmarks in export-heavy economies such as Germany and France were down 1.3% and 1.8% respectively. Denmark's OMX Copenhagen 20 index shed 2.7% and the London FTSE 100 index lost 0.4%. A gauge for Eurozone equity volatility jumped 3.75 points to its highest level since November. US President Donald Trump said he would impose additional 10% tariffs starting February 1 on goods from Denmark, Norway, Sweden, France, Germany, the Netherlands, Finland and Britain, rising to 25% on June 1 if no deal is reached. The threats triggered a sharp pushback in Europe, with the reaction reminiscent of the volatility seen when Trump imposed tariffs on global economies last April. His remarks also raised questions on the outlook of trade deals struck since then with Europe. French President Emmanuel Macron intended to request the activation of the EU's so-called anti-coercion instrument, Bloomberg reported over the weekend. German leader Friedrich Merz, however, said Monday that Germany's heavier dependence on export means it's less willing to unleash the countermeasure. The standoff is happening at a time when risk appetite has been supported by resilient earnings and sustained investment in artificial intelligence. The outlook will hinge in part on the European Union's response, with the bloc in talks to impose tariffs of 93 billion euros of US goods. Trump's threats raise the possibility of European governments trimming their holdings of US assets supporting the euro. According to Deutsche Bank, Europe is the US's largest lender, owning $8 trillion worth of US bonds and equities, almost twice as much as the rest of the world combined. Trade uncertainty halved German companies' investments in the US in the first year of Trump's second term, according to a German Economic Institute report seen by Reuters. In terms of the equity market reaction on Monday, luxury, automobile and technology stocks were among the biggest losers on Europe's main share index, slipping 3%, 2.2% and 3.1% respectively. Shares of auto giant Volkswagen slumped 2.8%, while Porsche fell 2.7% and BMW shed 3.4%. Among the continent's luxury names, LVMH dropped 4.3%, Kering slipped 4.1%, Hermes tumbled 3.5%, and Moncler was down by 2%. In contrast, some of Europe's defence stocks rallied. Rheinmetall, the continent's largest defence company, traded 1% higher, while French tech and aerospace giant Thales added 1.1%. German short-dated government bond yields fell after fresh tariff threats from US President Donald Trump. German 2-year yields, more sensitive to expectations for policy rates, were down 4 basis points to 2.08%. On commodity markets, global oil prices steadied on Monday as civil unrest in Iran subsided, reducing the likelihood of a US attack that could disrupt supplies from the major producer, while market watchers turned their attention to the standoff over Greenland. The global benchmark Brent crude price settled down 0.3% to $63.94 US a barrel. The US NYMEX crude price last traded at $59.44 US a barrel, unchanged from the prior day's session. The gold futures price jumped 1.8% to $4,676.70 US an ounce in after-hours trade on Monday, driven by a flight to safety after US President Donald Trump warned of extra tariffs on some European countries in a dispute over Greenland. Spot gold was trading near 4,670 in late North American trade after scaling a record peak of 4,689.39 US dollars an ounce. Elsewhere, spot silver climbed 5% to 94.41 US dollars an ounce after hitting a record high of 94.61 US dollars an ounce. Silver has risen more than 32% since the start of the year. Copper futures rose by 1.3% on a weaker US dollar, and after economic data in top metals consumer China came in stronger than expected, and top producer Chile trimmed output forecasts. Iron ore futures slid 1.6% to a two-week low of 104.66 US dollars a tonne in Singapore trade after Chinese data highlighted persistent weakness in the property market, raising concerns about demand for the key steelmaking ingredient. China's new home prices extended their decline in December, official data showed, underscoring persistent strains in the property sector despite repeated government pledges to stabilise it. Property investment and property sales by floor area, which are closely monitored by investors for clues on future steel and iron ore demand, also slumped. Australian shares are poised to open lower again on Tuesday after the index posted its steepest one-day decline in nearly 2 weeks on Monday, finishing 0.3% lower. According to the latest SPI futures, the ASX 200 is expected to open the day 31 points or 0.4% lower. The global risk-off environment could continue to weigh on growth stocks, with local technology shares expected to extend losses on Tuesday after they hit a 9-month low on Monday. But gold miners look set to hit new all-time highs today, with bullion prices notching a fresh peak. Meanwhile, mining giant BHP provides its operational review for the half-year ended 31 December 2025, while wealth platform Hub24 issues its second quarter financial year 2026 market update. BlueScope Steel shares trade ex-dividend. Investors have been buying mining giant BHP shares following a broad rally in resources stocks. It seems that many investors believe that strong commodity prices are going to lead to solid half-year results in February. BHP shares are now up about 21% over the past 12 months. China's commercial banks will likely keep loan prime rates unchanged between 3% and 3.5% for an 8-month in a row on Tuesday, despite recently signalling continuing monetary easing. The current focus appears to be on the Chinese government's funding plans and therefore the coordination of fiscal policy. When Wall Street reopens on Tuesday, streaming giant Netflix is expected to report the best holiday quarter revenue growth since 2020, driven by strong content across the platform, including live events and originals. United Airlines is tipped to announce a lower fourth quarter profit, weighed down by the impact of the longest federal government shutdown in US history. The nation's fifth largest lender, US Bancorp, will report fourth quarter results. Analysts and investors will watch out for the management's commentary on US President Donald Trump's proposed 10% cap on credit card interest rates. The Aussie dollar has charged back amid a sell USD revival on Monday. The Aussie dollar firmed from 66.88 US cents to 67.18 US cents and was near 67.15 US cents in late North American trade. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a great day.